Thanks everyone for coming. I'm Rob Simone, Chief Growth Officer of iFlip. I'm here with Randy Tate. Want to introduce yourself?
Yeah, I'm the CEO and one of the founders of iFlip.
That's kind of why we brought him. Randy and a gentleman named Kelly Korshak founded iFlip in 2017 before I was involved. And the reason that I'm involved today is because I found what they were doing to be so exciting as a growth marketer, as a growth specialist in the financial space. I felt like iFlip was so ahead of its time in terms of what we're going to see on other financial platforms in the future that I just had to be involved. So if you came to this and you saw that the title had to do with the future being hybrid, one of the reasons why we called this talk that was because a lot of people are really apprehensive about what AI means for the world, particularly when it comes to their privacy and of course their money. And over the last 6 months, 12 months even maybe, you as a consumer have seen a flood of offers from companies that offer AI something or other, and it's incredibly confusing. So we wanted to clarify what our stance is on it, why well before AI or machine learning was a household term, iFlip was investing in building a solution for the individual investor using machine learning and algorithms to really grow wealth. So I'd love, Randy, if you could just give a 2-second, 2-minute, whatever, description about why you're passionate about this product that you're building, and anything that you leave out, I'll make sure I get to in terms of what iFlip does fundamentally.
Yeah, from the perspective of our vision and what we do as a company and what we're here to change is we've built a very simple to use platform that assists everybody. The vision of our company is pretty clear, and it's written with specific words. We're here to empower everyone to preserve, protect, and grow wealth, and give technology that has generally only been available to elite institutions, billionaires, to give people access to technology that's not been available, and to do it at such a fraction of the cost that it becomes an absolute no-brainer for your stock market investing.
So there's an example that I always use to make that clear to everybody. You know, if you invest, or if you work with an advisor, or if you work with a bank advisor, or even a robo-advisor, every single one of those solutions is, generally speaking, unless you trade all of your own assets, is a buy and hold strategy, right? You are in the market indefinitely, and for 99% of the public, that works better than not investing, right? 15 years or more in the market, there's never been a period in the US stock exchange where you would have lost money, so great. So it's better to do that than to be out. But do we believe as people that the biggest institutions in the world, in America, that they buy and hold indefinitely, right? Why do PhDs in economics, why do professional traders and investors work for big banks and work for hedge funds, right? Why do wealthy individuals go to a hedge fund instead of Betterment, right? They don't buy and hold forever. They use cash and other products as a position strategically when it makes sense, and they use AI. They use algorithms. So we don't believe in buying and holding forever. And part of the reason why we can do that, and Randy made this very clear to me very early, is because we don't charge the consumer the same way that they do. Advisors, institutions, and other platforms, they're incentivized to keep you in the market all of the time because they can't charge you if you're not. But wouldn't you want to avoid some of the worst days in the market? Maybe talk a little bit about how iFlip has performed during corrections and crashes and some of the events that we've seen as recently as the past couple of months with tariff introductions and other things, and what that's meant for individual customers who are on the platform.
Yeah, so when we talk about performance, people forget to think about the risk. So I'll give you very fresh in everybody's mind this year alone. If you were in the S&P 500, January 1, if you're invested in any traditional funds, you were losing money all the way up until April 9th. All year, you were down 15+%. April 9th, 10% day, it bounces back. Every advisor says, see, that's why you buy and hold. It came back. We actually hold the stance of, wouldn't it have been better to have your money not in the market during that downturn and then buy on that day, which is exactly what we did. So now you skip the 15% down and still take the 10% up. Over time, there's one statistic I tell everybody all the time. Over the past 20 years, if you put $1 million in the S&P 500 and you just left it, you didn't touch it, it'd be worth around $5 million today. If you missed the 10 best days, just the 10 best, if you missed those, you'd be around $2.5 million. What they don't tell you is if you also missed the 10 worst days, you'd be over 10 million. So missing the downturns, skipping the drops is the most important. And that's fundamental to the way our code, our technology, and the AI itself operates.
It's a really good point, and also it should be made clear, right, that iFlip is not a crystal ball, right, and we don't miss every single bit of every bad thing that happens in the market, right?
No,
and we
don't.
get that question all the time. But think about a stop loss system on steroids. In some aspects, that's what it's like. People have a really hard emotional time making decisions about if they should get out, if they should get in. And as humans, we generally mess that up every single time when we trade our own investments. So we take some aspect of that out of the human equation and the emotional equation, and over time, that protective stance equals performance. The other thing that you taught me very early on, which is really interesting, was that even when the market is on a tear, and we're not trying to incredibly outperform that market, right? It would just be okay to buy and hold. There are instances in your life where you just won't want to be overexposed, right? Risk management as a principle is not available to consumers in any product that you could find out there for the retail investor, unless you are the wealthiest 1%, the family office type of client, somebody who has portfolio managers that can actually manage that risk. And rebalancing is not risk management. Diversification is not risk management.
Yeah, a couple of myths that exist on Wall Street that we'll just get out there. Raise your hand if you've heard this. Diversification is a great way to mitigate risk. Have you heard that? Yeah, that's actually not true. In fact, the more diversified you become, the more like the market itself you behave. And when you start behaving just like the market, you don't need to do anything except go buy the S&P 500. Just go buy the SPY and sit on that. So when you think about that process and that mindset and what we've been taught, Wall Street has, in effect, found a very successful way to pass the risk of investing to Main Street. They don't play by the same rules as all of you and all of us. And that is why and how, that's where this whole thing got started. One of our partners, a mathematician, spent 30 years on Wall Street managing, quant for big funds. What got this whole thing started was that statement. He said to me, he goes, Randy, people don't realize that the stock market, in the world of equities, Wall Street passes the risk of investing to Main Street. They do it in two ways. They do it with the ability of an E-Trade or a Robinhood to let you go buy and sell yourself because they know the masses can't compete on their own. And they do it through advisors and the creation of products. Much like Rob said, if you believe BlackRock, JP Morgan, and those companies are investing the company's assets in the products they're giving to the advisor world to sell to the retail world, then you don't understand how the game's playing. Their money's not in those funds.
Yeah. So robo-advisors did a really good job of getting us part of the way there to help with this problem. Things like Betterment and Wealthfront and things you've heard of, or even robo-advisors that live within Charles Schwab's platform. They did a really good job of removing some of the emotional mistakes that we make. They didn't get us fully there because they still live on that Wall Street model with respect to fees. They still live on that Wall Street model with respect to buy and hold. And they take less risk by doing that because ultimately they never want to be responsible for making a decision where you're able to point at them and say, I should have stayed in, I should have stayed in. Just like, your advisor would kind of be the same. But talk a little bit more about what you think the future of automated solutions like this look as AI gets better, and kind of already what's transpired with what iFlip has done to improve its AI product.
Yeah, there's a lot of misnomers about AI. Everybody sees AI. You've probably seen 20 ads since you've been here wandering around on your phone about this, AI that, and particularly as it relates to the stock market, I can tell you pretty much in general, it doesn't really exist at scale to the retail person. And let me talk a little bit about that. All AI, all machine learning is algorithmically driven. All algorithms are not AI. There's a very big differentiator in what goes into that. So when we talk about automation, this hybrid notion, AI is built by a person. We happen to have two really good ones that build ours. And when you look at the way it's built, all cars aren't created equal. Everything's not created equal. So how it's built matters. One example, and this, I'm not an AI expert, so don't jump on me all too much. But the reality of it is, each symbol in our universe that the AI oversees, just wrap your head around this. Here's your little AI education. Has 199 indicators on it that's targeted, mapped, and looked at every single day to create mathematical correlations with the performance of the next day. It's ran forward from a point way back in time, like 2007, to create a list of predictors, and it's fully automated. So an algorithm, let me give you an example of a simple algorithm. If Apple goes up $1, buy it, and you can program a computer to do that. Probably every one of you could do the exact same thing. However, if you want to change that parameter, if you want to say, a dollar's not good enough. If Apple goes up $2, we want to buy it. A human with an opinion has to go in and change it. The next generation, what we're doing and what the way it's going to be done, each of those algorithms are no longer managed by a human. We have machine learning that's been trained now live since 2017 that's making the decisions on whether or not the algorithm is correct. So the algorithm doesn't get to change its own rules. The machine learning changes the rules of the algorithm. That's the hybrid model. Takes the human to build the indicators, program it into the machine. That machine then oversees the other mathematical stuff. So it's a fairly complicated process, and that's the future, Rob. When we talk about hybrid, it still starts with a human. Still starts with a human. This is not the Terminator. It's not going to come get you, at least not yet.
It's a fairly complicated process that then we go and wrap into a really simple interface for individuals, and that was a really important priority of mine when I got involved with iFlip. An AI-driven platform, an algorithmic-driven platform, any kind of automated investment platform needs to make your life easier, because everyone here and everyone who uses this type of solution is a busy professional doing something else. And we met at least 12 people at this conference that stopped by the booth and said something very, very similar. They said something like, I have a Schwab account, I have a Fidelity account, whatever account, and I really like to be involved in my investments, and I'm into this sector and I make this choice, but I get busy, and then this thing happens and that thing happens, and I forget to jump on that piece of news, or I forget that I wanted to set a stop loss or whatever it might be, and then I come back to the same place over and over and over again, which is like, I need something more automated. And then every person thinks that they're very limited in those choices at that point in their life. They think option one is something like an advisor, right? Very expensive, and in our opinion is something that is appropriate for only a certain amount of parameters, right? You're this wealthy, or you have this complication with respect to tax or trust or estate or business and personal assets, or all of those things that might require a planning component that's a little bit more complex. But for most of America and most of the world, we're busy earning income and doing things that we want to see appreciate in the future. And that's why the AI that's been created by Randy and Kelly and others at the company has been wrapped into a really simple to use interface with investment products that are based on what I would think most of you would have in terms of objectives for your long-term growth. Core strategies. Talk a little bit about, please, the core functionality, the core strategies at iFlip, and then what's available past that. That's a little bit more exciting, a little bit more fun, that people can kind of have fun with on the platform.
Yeah, so when you set your account up, you'll be prompted to pick a core strategy. You've all heard the three words: balanced, conservative, or aggressive. All of those have their own SmartFolios that you get to choose. Doesn't mean you have to invest in it. Just means you got to declare what your mindset is.
Please explain what a SmartFolio is.
Yes, so a SmartFolio is a basket of stocks or ETFs. And in that basket of stocks, each one, like I mentioned earlier, each symbol is managed by an algorithm and an AI. They're dual managed, so the algorithm is overseen by the AI. Now, they could be sector driven. We have one called Red Oil. Guess what's in it? Energy stocks, oil companies. We have one called Big Tech. It's the Mag 7. All of these are well-known big names, but there's 9 total SmartFolios besides the core 3. And so when you pick one, the AI is managing the bucket for you. That's the concept of SmartFolio. Everybody asks why it's smart. It's not just a portfolio. Well, it's smart because it's doing everything for you. It's adjusting its rules and educating you that way.
Yeah, and unlike just buying an ETF, though each one of those SmartFolios, which has all of these underlying components that compose it, has the ability for any individual position to go to a cash position automatically, right? So there's no SmartFolio on the platform that generally would ever be all out, right, or all in. There's all these independent things that are happening under the hood. And for anyone who's interested, you can kind of get into the weeds and look through all of that. But for most people, it's as simple as using a robo-advisor, but tremendously more successful with respect to performance and protection.
Yeah, when we set out to create this company, back when we started this conversation was 2016. We didn't launch till 2017. We set out with 3 objectives, and these came from me, and I'm not a finance guy. I was nothing but real estate, stayed away from the stock market relentlessly, so I built a product that I could invest in the stock market. We wanted to do 3 things. Number 1, we wanted to be better. Interesting word. Better does not just mean performance. Better means risk management. We want to simply beat the S&P 500 with half the risk of owning it. That is the overall intention of what we do. That's not enough. Like Rob said, when Rob joined the team, the first interface we created, way too complicated. I couldn't hardly even use the thing, but it was built by quants who wanted a trading platform. So we get a marketing guy that understands growth, understands the space, is in the industry, and says...
Allegedly.
Maybe I should check. And respin it. So now, number 2 on our list of 3 is to be easy. We want to be, and we are, the big red easy button for investing. The setup, the amount of time it takes to set up your brokerage, go through your KYC, pass your AML, link your bank, get it completely up and ready to go, takes you, 7-8 minutes. I'll say that again. All set up, 7 to 8 minutes. What used to take all day sitting in the office across a mahogany desk with some guy in a suit. Now it's less than 10 minutes, we'll say that. And so when you talk about ease of use, that is paramount. We have another release coming that I've seen the previews of. It's going to continue to get simpler and simpler and simpler. That's very important.
Super cool. So before we take any questions, I want to just talk about one other topic, because a lot of what I've noticed speaking to people at this particular conference, and Randy's on the road many, many nights a year. I'm with him at many conferences. We talk to a lot of people in a lot of different industries. There's a higher level of financial knowledge at this conference that I've noticed. It's really impressive. There's also a lot of folks here that invest in real estate. So we have a partner that we're here with, the IRA Club. Our booths are across from each other, right down that road there. And there's a really interesting integration that happens with him that I think, I'm just guessing, might be applicable to people that are here and people who are going to listen later. So Randy, I want just to have you talk really quick about how a product like iFlip can empower a real estate investor, particularly some of the folks that we've met here who invest in real estate through a self-directed IRA, which is a really interesting concept that a lot of you have either explored or know quite a bit about. So could you just touch on that really quickly?
Yeah, IRA Club's one of actually they are our best partner. And the way we're able to do that is because our software, so say you go buy, I'll use their words, 123 Green Street, you buy a new house or a rental house. You put it to rent, and now the rent's coming in every month. And it just goes back and sits at your IRA custodian. It just sits there. We have built it so that it can just automatically transfer right into your flip account and continue to grow until you're ready to buy your next real estate project. And that allows you many different facets. One, you could be a little more picky about the real estate project you get because the money's making real returns, but it's also super simple, super easy to set that up so that you've bought the house, rent comes in, moves into the stock market software, sits over there and grows until you're ready to move into your next real estate deal. That's one of the biggest components of what we do. And we're integrated fully technologically. So you literally, you know how to use Venmo? Yeah? It's like moving Venmo to move money from IRA Club to iFlip.
Yeah, and essentially ensuring that any kind of income that is generated in that retirement portfolio is put to work and not just sitting in cash, right? Which is a really important concept for everyone here, but everyone in the world. And making sure that we have future integrations with other partners that allow for that seamless ease of use that we all kind of strive for in our lives, but also in our financial planning world. And I see those kind of integrations growing and happening more and more.
Yep, we're going to get more and more of those.
Anything else you want to add before we take some questions?
One more thing. The third component I talked about that we wanted to be. We wanted to be better. We wanted to be easier. We also wanted to be less expensive. So we stay in the software as a service space. My background, software. We're a SaaS company, which means, and I'm not going to stutter, whether you have $500 on our platform or $5 million on our platform, your fee is, wait for it, $7 a month.
We're designed like an app. We charge like an app. Everyone here has an iPhone or an Android, I think. If you have a flip phone, show it to me because I'd be really impressed. I'll give you something free. I've been trying to get my kids to take flip phones forever just so they don't have social media for a little while longer, but that hasn't worked so far. Now the point is that we're designed to be easy. Everyone's used to paying $9, $6, $3, whatever for that subscription that you have. Why should it be any different? You invest with iFlip for less than you spend on Netflix every month. And that has a lot to do with the range of customers that we have, right? Obviously, as a company, it's helpful to us to have more assets under management, right? Like there's all transparency here. But from the standpoint of fees, right, we love people who are just starting their investing journey. We also love people who have been through the rigmarole of all of those other solutions and have tried to find a home that makes a lot more sense for them. And I would just say that, we also don't see the world as an all or nothing, zero sum kind of game, right? Like you don't need to put all of your assets in one place with one advisor or with one platform. There are easy ways to grow with partners until you get to a point where you want to really make that larger investment. So our minimums are super low. We start at $500. That's really just to make, and that minimum only really exists so that we can offer what the platform is good at, and so that people don't mistake this for a get rich quick kind of alternative investment, right? There needs to be steady kind of investment and growth, just like you would with anything else in your life. So I'll kind of pause there and see if anyone has any questions, and we've got some already. Yeah. Oh yeah, so while we're taking questions, if you didn't already get one, a gentleman in the back here named Lee, wearing an orange shirt, has 25% off coupons for subscriptions that are only available through Limitless. That's the one. And you're definitely going to want to take one of those whether you decide to do it or not.
I wasn't here in the very, very beginning. You might have already covered this, but what is your panic button? What is your fail safe? It starts trading, something happens, whatever, market shuts down. How is that addressed?
We have two. Number one is we only trade on the open. On the open. On the open of the market. And before the market opens, a human looks at all the trades that are going to be executed and has the override panic button. So if it shows 10 million shares of Apple being bought across the platform, that would be a little odd, so he would hit the button. To date, never had to hit the button.
Yeah, I should also mention that iFlip is not a custodian, right? iFlip is a software at its heart. So your funds are custodianed with one of the largest clearinghouses in the world, right? So that money is never even being deposited with us. We're just guiding how it gets invested, like many other investing solutions do. A lot of the bigger brokerages has become their own banks, right? Like Charles Schwab is a bank, E-Trade is a bank. But at our size, we use a regulated clearinghouse to do all of those transactions.
I understand that you are in the S&P and traditional normal stocks and bonds. I missed the part. Are you into crypto at all?
Yes. So in late 2023, it's a really good question. Our additive SmartFolios, so the products beyond the core strategies, are generally sector focused. And one of those products is called BitFlip. Okay, and BitFlip was designed by myself and Randy and Kelly towards the end of 2023 because we realized that most people's apprehension with buying Bitcoin or participating with it was the fear of the volatility. So we've designed a product that levels out volatility. That's what iFlip does, by protecting positions. So BitFlip uses the underlying ETFs that are available, iShares, IBIT as a core part of its portfolio. 50% of every dollar that's invested in BitFlip is a buy and hold Bitcoin long. The other 50% is actively monitored by AI to decide when it believes you should be in or out of that investment. So what that does is it levels out what we hope will be that up and to the right curve forever with Bitcoin, theoretically. But it also makes sure that you never miss an unexpected bull run because 50% is always in. Now, when Bitcoin has the type of years that it's had in this 2-year part of the cycle that we're in, it's very hard to outperform that asset. But what BitFlip really does well is it manages those other parts of the cycle that could be very bearish. So in the times when everyone is holding Bitcoin in those bearish times, that's when you extrapolate that portfolio out over 3, 4, 5, 6 years. That's when the performance really takes unbelievable leaps forward.
What's the ramifications to pull cash out of, say, Bitcoin through all of this? Do we pay taxes normally, or do we have to prepay tax to come out?
Well, because BitFlip uses an ETF as its Bitcoin vehicle, it's taxed the same way your equities are taxed. So in other words, if you buy an ETF that's a crypto ETF, it's taxed the same with the same regulations that a stock is taxed. So there's no physical coins that are being held in our product. We're not a crypto wallet, and we're not regulated as a crypto exchange. We're accessing those products through the stock exchange. Just like if you went on Schwab today and you bought iShares Bitcoin or Grayscale Trust or any of those other products, it would exist like an equity in your portfolio. It makes it much simpler, and until we have the market structure available in the United States for all of the banks and institutions to participate in crypto the way that people hope, it's not really something that we're able to be involved in, nor do we think is in the best interest of our customers right now.
Are we able to create our own list in the SmartFolio of the stocks that we want, or are we only limited to the ETFs that you have?
Great question.
Yes, you can. There's a customizable feature. You can build your own. Maybe you want it to be only Facebook. You could have a one symbol portfolio, or you could put 100 symbols in there. Not every single symbol is mapped by the AI. It will tell you if it is not. So if you build a custom SmartFolio and you put a symbol in there that is not oversaw by the AI, it becomes a buy and hold.
But yeah, that's the customization is really important. I'll be honest with you, very few customers use custom SmartFolios because they're coming to us for simplicity. The other thing is that anyone who has an iFlip account can also just decide they want to buy individual stocks and hold them, right? So we trade like any other exchange. Like you could have money in a SmartFolio and have it automated. And then you could just decide, I actually want to pick up some Apple stock, and I'm going to do that because I have cash in the portfolio. That's no problem, and it's a zero commission situation.
I do a lot of day trading, and like, I want to get in and out that same day. Is there a way for the algorithm to get in and out that same day? Just because I know most of the gains
No.
and losses happen after hours.
Yeah, I'll do my best Kelly impersonation here. There's been less than 10 times when an intraday trade would make a significant difference in the overall performance of an individual portfolio. We only trade on the open.
And I'll go further as to say that we're really set up to be an investor platform. I just want to be honest about that. Like, our interface and our tools are not really designed for day traders or active traders. We offer convenience for people who have, assets. If you've decided that there's cash on the platform that you're not putting to work in a SmartFolio, of course we want you to be able to jump into a position that you want. But outside of that, we're really not designed for that type of sophisticated trading.
If I wanted to override and sell, I have that ability to go in there and just say, I want to get out.
Yeah, you just hit divest.
Yeah,
right, thank
everything is liquid on the platform, probably more liquid and clears faster than some of the other platforms that I've used. And so, like Randy said, divest means come out of a portfolio that then lives in cash on the platform, and then you decide if you want that cash to go to your bank or into another investment. Our booth is right down this corridor here. Please come and visit us if you have extra questions, and also if you just want to try to challenge us on some AI knowledge. That gentleman already did. Thanks,
right.
guys.
Thank you,
Appreciate
guys.
it.